Silver just logged its second highest quarterly close ever. Only 2011 was higher. More significantly, at least we think, this was the highest half-year close on record. Suppressed markets don't usually allow this. We believe macro funds that chased gold's record annual close in 2023 may now eye silver next.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. This is the GoldFix Market Rundown. Today, we will be discussing silver, largest mid-year close ever. And we will be discussing we'll just go through some of the events that could be converging on the new reality regarding whether gold and silver should be going down or up. And those realities are domestic in nature as opposed to geopolitical or overseas. All right, start with the markets first. 10-year yields are down almost 3. The dollar is down 26. Multi-year lows cracked a level that I had last night. An alert went off. It's 2021, I think now. S&P 500 is 6183, down 11. The VIX is 1735, up 61. Gold is up 49 at 3352. Fishhook official. We'll probably have a measured move on that today. Let me write that down. Silver up 37, lagged in the beginning as gold rallied. Gold led this. Lagged, caught up, and now is backing off as gold remains bid. So people are putting on that gold-silver trade once again, which means it's domestic fiscal issues this time. Copper, 507, up almost 5 cents. WTI, 66.41, up 63 cents. Nat gas down 6. Bitcoin lower. Platinum and palladium mixed violently. Palladium is now up $24. Platinum is down $2. There's a big position thing going on there. Buy platinum, sell palladium. People are taking profits and locking in losses, and these markets are very thin. So you see these exaggerated moves in one while the other doesn't go anywhere. Gold and silver, gold-silver spread, higher, stable, and grains are offered with wheat bucking the trend. Okay. Gold and silver rise as fiscal events and liquidity pressures converge. Two topics: silver's highest mid-year close ever, as mentioned, and gold and silver rise. And we're going to explore some of the reasons for that. First, silver's highest mid-year close ever. Silver just logged its second highest quarterly close ever. Only 2011 was higher. More significantly, at least we think, this was the highest half-year close on record. Suppressed markets don't usually allow this. Every year before this year, silver would be slammed on the last day of the mid-year. But that did not happen this time. We believe macro funds that chased gold's record annual close in 2023 may now eye silver next. A post-holiday surge remains a live possibility as macro discretionary starts to eyeball silver again. To the extent that they get in, I don't know, but the buying will be there. And it doesn't have to be American macro discretionary. It can be Chinese. It can be Asian. So we sent out a post on that last night, a very special end of day post. And we sent out another post this morning covering the current topics, which we're going to review now. All right. This is Gold, Silver Bid as U.S. Concerns Grow is the title. What it really is, we're going to go through some of the news events, the current events. So to give a broader backdrop of the risks involved that are making people look at metals again. So here's the first one. The use of the Federal Reserve's reverse repo facility has spiked in recent days, driven by declining reserve balances, heightened demand for Treasury collateral due to net issuance, and quarter end liquidity pressures. So financial liquidity is tight right now. When these happen at the end of a quarter or a mid-year, they usually are spiked and they're temporary. And that may be the case again. However, Elon Musk has reignited his criticism of Trump's so-called Big Beautiful Bill, a nearly 1,000-page spending package. Musk called it insane and destructive, warning it will add trillions in debt and kill future-facing industries. That's someone's opinion, but he's probably the most influential person in the world, even more influential in many ways than the president of the United States. So he's kind of being the bond vigilante in the effect that he has on the market. Next item, the fiscal drama and liquidity stress between the reverse repo and the Trump-Musk love fest arrived just as several key macro events loom. The passage of the debt bill, the upcoming BRICS summit, the planned Basel III implementation, and the expiration of the key tariff ceasefire. So we've got July 1, that's today. July 4, have a good holiday. July 6th, that's the BRICS. July 9th, that's the scheduled ceasefire to end on tariffs. July 1 today is supposedly the beginning of the BRICS, not BRICS, Basel III implementation. So that's probably an immediate driver by people late to the party saying, oh, Basel III is going, there's stuff going on here. We have a lot more on that full analysis and premium. We have several related posts. We want to draw attention to a couple of those with you right now. The top one there, must read, the U.S. must spend or die now. We believe that that's one of the key drivers behind the next leg higher in gold, and said so yesterday morning. And that's on the cusp of Trump's making America great again through fiscal responsibility, whether real or imagined, is just out the window. It's not happening. Okay? So he has to cut bilateral deals. He has to weaken the dollar. He has to get cheap oil. And he has to spend. He has to spend. That's how it works. At this point in the game, with midterms coming and him being in danger of being a lame duck, he will be after midterms. Whether he does good or bad, he will be from many points of view. He wants to fix America. And so that means spending money. Witness three things that have happened over the last 3 days. One, we're talking about the deficits, the debt ceiling being raised again. That's going to happen. That will be almost certainly, normally it would be fought over and then agreed. It would have been rubber stamped this time because we need it. But now because of Musk, maybe there'll be a little bit of backbiting and infighting. But you have these three things. You have the debt ceiling being raised, the bill that spends $5 trillion. I think Congress it was $4 trillion. They just said, I will throw another trillion on it. It's just the piggy bank is open again. And the piggy bank is your money. And the third thing is Trump saying outright that he wants to instruct the government to finance all of its debt in less than a year. So no 30-year bonds, only 9-month T-bills or whatever you want to call them. So those are three things saying in succession, I'm going to spend now. That's it. Sunday discussion, we just put that out. We haven't emailed it yet. That's almost 3 hours. I haven't even gone through it to break it down yet, but there are many very I think important topics. We talked about stable coins a lot. Obviously, we talked about gold and silver, and there are a couple other things we talked about in there. The FT put out a report yesterday discussing the kind of like an educational piece on financial repression. It could return, and this is what it looks like. Well, we did that last year. So we're going to do it again, but we're going to add in more information. So we're calling it FT analysis financial repression returns. We break down what they wrote, we make it more informative, and we give it to you. That wasn't emailed yet as well. About last night's bear attack, that was when we noticed in short succession. On Friday, we got concerned. On Saturday and Sunday, we said we're looking for this. On Sunday night, it happened. The market did crack as we predicted. And the turnaround was violent that night, which is very good. And we said, well, maybe we might have a fish hook here. And we got a fish hook. So a fish hook essentially says that all the people who sold it lost money. All of them. And so now we get to see how much money they have to sell it again. And if they don't have any money, then they're going to go, oh, you know what? I think I'll be bullish. And boom, we go higher. That's where the measured move comes from. Okay, moving on. Coming soon. Sorry, I'm being a little bit cynical today. I just read these. Coming soon. Doom. That is what's coming soon if we don't fucking grow up. Trump, this is a headline, an actual Dow Jones Newswire headline. Trump, asked about deporting Musk, says he has to take a look. Trump, Musk is upset he lost the EV mandate, but he could lose a lot more than that. Probably true. Tesla, SpaceX, and Solar City were three of the most subsidized companies in the US starting in 2016. Without subsidies, Elon Musk's fortune would not have been made. Now, to be fair, we subsidized the right thing. Had a horrible deal for the US. But now Elon Musk, as any billionaire would, is trying to protect his franchise. And if other industries are getting subsidized, well, he's not happy about that. And so he's a fiscal conservative now. It is what it is. This week, today's Wednesday. Today's Wednesday, right? 8:15 ADP report. So it's already out. The market's not really giving two shits about it. So, okay, the market's really focusing on unemployment, which is normally on a Friday, but it's on Thursday. So my suspicion is the banks will be talking about unemployment very heavily today in terms of the rate cut effect. And although I'm not sure what it'll do to the markets right now with all this other stuff going on. Anyway, keep that in mind. Let's go to the charts. I'm losing my intercom to my intern. All right. Here we go. We're going to start with a 6-month chart. So each candle is 6 months. There's a 6-month gold candle. We don't really care too much about that. I mean, we do, but there's a 6-month dollar chart. Why does that matter? Well, the dollar hasn't gotten, this is why my alarm went off last night. Dollar hasn't been this low since 2020 on the way down, and this low since 2022 on the way up. So we've just undone 4 years of American exceptionalism. Now, going to silver, I'll let you see that big, beautiful chart. Where is that? There we go. There's your silver chart, 6-month chart. 6 month, people talk about the quarterly, and I do as well. And Jordan Roy Byrne at the Daily Gold, he and I talk about these all the time, and we'll be sitting together Thursday, I think, to discuss our end of month conversation on markets. Well, there's the silver 6-month chart. It's the mid-year report. And at the mid-year report, traders get money to allocate. Investment banks give money to allocate to investors. So when the phone rings and someone says, hey, What's doing well? Well, silver made a mid-year high. It's the highest mid-year high silver's had in forever. And that triggers people to put money in. And we think that's going to matter. It won't be a lot of money, but it'll be more than what usually comes in. So we would say the lid is finally off. And unless it gets smacked down today or tomorrow, understand that the silver market from here climbs a wall of worry. I'm not so sure when are they going to slam it, when are they going to slam it, but I think it's for real this time. Next chart. Well, I want to come back to silver again. I want to give you a little bit of perspective. This is a Bollinger Band chart, and it tells me when the market is apt to move violently, although not in either direction. This one is when I got long before, and the market ran up, and I got very, very fortunate. Now I'm long again, but for a different reason, and I'm early. This could go on for 2 weeks before the market kicks higher again, probably 5 days. But just know that we're in a situation where silver's going to start narrowing in its range and then coming out the other end explosively. Higher, I believe, but we're not sure. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.